I think the price of silver needs to go up at multiples in order for people who have silver to get rid of it so that people that need the silver can get some. I personally, unless I need to, am not going to sell my silver. I'm going to hold on to it. But some people might. If we're at $300 silver in 2 months' time.
Trump is going to lower interest rate, going to do everything he can to prop up the economy. Again, 50% of the United States gross domestic product last year, 2025, brought to you by AI investment. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold and silver prices rise because they're dollar-based.
Financial analyst Mario Innecco and trends forecaster Gerald Celente argue that the silver market is locked in a supply squeeze that can only be broken by a price explosion in multiples. Innecco declares he won't part with his physical holdings unless necessary, suggesting that only a shock valuation, potentially hitting $300 within 2 months, will entice hoarders to release metal to those who desperately need it. The duo links this inevitable rise to Trump's economic strategy, slashing interest rates to prop up an economy where 50% of 2025's GDP was artificially driven by AI investment. As rates drop, the dollar is expected to plunge, fueling a direct, violent ascent in gold and silver as the only true stores of value. If you found this analysis helpful, make sure to hit that like button, share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
It's not just because of inflation, it's because of the supply, especially with silver. I know there's a lot of silver in the world from past production, but it's in places that is really hard to get and recycle. But so right now, there's a desperate rush to get physical silver. There's a huge shortage. We've seen the mining supplies not match the demand for the last 5-6 years. And that's why I think the price of silver needs to go up at multiples in order for people who have silver to get rid of it so that people that need the silver can get some. I personally, unless I need to, am not going to sell my silver. I'm going to hold on to it. But some people might. If we're at $300 silver in 2 months' time, I'm sure a lot of them will sell. But it's difficult to say at what price, Elijah, things are going to balance out in terms of supply and demand. So it's not just inflation. And we've been hearing, you probably heard of this rebalancing of a commodity index, that it was going to crash silver. And despite that, silver's already up roughly 20% this year. And we haven't even finished January. Gold as well is up a few percent. So I don't think it's going to stop this performance. Of course, there will be some sharp corrections along the way, and you just need to sit through those, I think. I always think of trying to get as much of both with my fiat. So, but if people have a lot of silver and they've done really well and they don't have any gold and they want some exposure, why not? Get rid of some silver to get some gold. I don't have anything against that. But the other important thing about the gold-silver ratio is that you and I and others in this space have always been telling people that for you to have a real raging precious metals bull market, you need to see silver outperforming. And that's what we're getting. So this is, I think, in my opinion, just the beginning. And I don't know how long it's going to take. But if you look back to 1933 and 1980, when the credit cycle bottomed, the Dow gold ratio, in 1933 was 2-to-1, and 1980 was close to 1-to-1, and we're still just above 10 to 1, the Dow Gold ratio. So I think there's still a lot of room in the precious metals bull market, especially relative to the stock market. Yeah, China and India, they're buying a lot of physical silver. Also, the Gulf cooperation countries, which is like Saudi Arabia, UAE, Qatar, Bahrain, and Kuwait. They had a deal with China back in December of 2022 to cooperate in building their infrastructure. And it even mentions photovoltaics, which is for solar panels. So yeah, all these countries are buying a huge amount of physical silver. In the West, the LBMA and COMEX is more of a paper market. And I think that's why the price of physical silver in Shanghai is higher than the Western prices, because it's for real physical silver. And that's why the Chinese as well, they've put export controls since the 1st of January this year on exports of silver. And yeah, I think it's about $10 premium over in China. And then you can also, I mean, when you take delivery in China, you pay VAT. But Eric Young, who's also known as King Kong, he does a very good job of differentiating the price with VAT and the price without VAT. And even without VAT, I think silver's trading around $100. I think today it's sell about 101 on the Shanghai Gold Exchange. So that's why it's happening. It's because it's a real physical market in the Middle East and the Far East and in India, while here in the West, it's still kind of a hybrid, but eventually I think there's no way that the price in London and New York won't catch up to the price in China or even India. I think there's a 17% premium.
Mario Innecco argues that the silver surge is driven by a desperate physical shortage rather than by inflation alone. Following 5 years of mining deficits, he believes prices must rise in multiples, potentially hitting $300 within 2 months, to incentivize holders to sell. Innecco points to the gold-silver ratio as confirmation of a raging bull market, noting that true rallies occur when silver outperforms gold. He highlights massive infrastructure and solar project funding by China, India, and Gulf nations, which has driven Shanghai prices, trading around $101, significantly higher than Western paper markets. With China enforcing export controls and premiums widening, Innecco predicts that suppressed prices in London and New York will inevitably catch up to the physical reality in the East. Let's get into the interview.
Trump doesn't care about the petrodollar or anything else. He's going to lower interest rates. You can see what he's doing with Powell, trying to get rid of him, bring him to court, called him a moron. And well, not exactly. I wanted to say he didn't call him that because I don't want to get sued, but he made fun of him. Go back to 2018. Again, tracking trends is the understanding of where we are, how we got here, and where we're going. The Dow had its worst December since the Great Depression in the 1930s. What did Trump do? Brought in Powell, lower interest rates. Powell lowered them in January. Markets went up. Oh, the repo crisis happened too because of all the fake money going in. Yeah, well, you forgot about that, everybody, huh? Everybody forgot about the repo crisis that was going on because that was in September 2019, and then China launches the COVID war in January 2020, the year of the celebration of their Chinese Lunar New Year, the year of the rat. So everybody forgot about that. So Trump is going to lower interest rates, going to do everything he can to prop up the economy. Again, 50% of the United States gross domestic product last year, 2025, brought to you by AI investment. The lower interest rates go, the deeper the dollar falls. The deeper the dollar falls, the higher gold and silver prices rise because they're dollar-based. This isn't rocket science. And it's cheaper for other countries to buy it as their currencies go up. So that's what we're going to see. Lower interest rates, the death of the dollar. The BRICS have had enough of the United States, as many other countries have. And the BRICS now are responsible for 40% of the world's gross domestic product. It can't. Yeah, the United States, it's more than $38 trillion in debt. And the lower the interest rates go, the more inflation is going to go up, worse things are going to become. Again, going back to the COVID war, by the way, which Trump, all his lovers, forget that he's the guy that locked down the country It was Friday, March 13th, Black Friday. He's the guy that pushed the Operation Warp Speed gene therapy inoculation. He's the guy that locked down the country and dumped in all this fake money. And then Biden followed, one after another. Again, all the cheap money and bigger debt. They can't pay off this debt. There's no way. So precious metals are going to keep going up. People had no idea the United States overthrew the democratically elected government of Mohammad Mossadegh in 1953, because Mossadegh had the nerve to say that oil in Iran belongs to the Iranian people, not Anglo-Iranian oil, better known today as BP, or Standard Oil, better known today as ExxonMobil. It belongs to the Iranian people. No, it doesn't. That scumbag that everybody looks up to, an arrogant piece of crap, a little warmongering freak that couldn't fight his way out of a paper bag, Winston Churchill. And Kermit Roosevelt, Theodore Roosevelt's great-grandson or grandson, you can look it up. They didn't release it until 2017. The MI6 and the CIA overthrew the Mossadegh government and brought in the Shah and the Savak, the secret police, that made the SS look good. So when the revolution happened, that's when I became a political atheist. I realized that people don't know, as we say in the Bronx, people don't know dick about shit. They swallowed the crap to hate the Iranians, just like they taught us to hate the Russians. And that's what they're doing right now. This is real what's going on. And again, only by the facts. When did Trump overthrow Maduro? When did he kidnap him? Oh, it was on a Saturday morning. Oh, when the equity markets were closed. When did he bomb Iran? Oh, on a Saturday when the equity markets were closed. So when he does it, he's going to do it on a weekend. And that's why gold and silver prices are skyrocketing, because of the geopolitical and socioeconomic unrest that we have that I've never seen in my lifetime.
Gerald Celente predicts Donald Trump will aggressively slash interest rates to prop up an economy where 50% of 2025's GDP was artificially driven by AI investment. Celente argues this cheap money strategy will effectively kill the dollar, acting as rocket fuel for gold and silver. He warns that Trump, who historically initiates geopolitical shocks, as the Maduro operation or Iran strikes, on weekends when markets are closed, is creating a powder keg of instability. With BRICS nations abandoning the dollar and the U.S. drowning in $38 trillion of unpayable debt, Celente sees precious metals as the only refuge from the coming inflationary storm and unprecedented socio-economic unrest. As the dollar falls, metals must rise. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.